Hello traders and welcome to another video review. Today is Friday, the 13th of the October 2020, and we are going to take a look at the Forex calendar, and then we are going to see what is going on with the different Forex pairs. So let's just dive into the Forex calendar. As you can see, I have marked only the important events. Yesterday was kind of an important day. We got the interest rate decision from Bank of Japan and ECB as well, and then we got the GDP from the United States. As you can see, GDP has beat the expectations by printing 33.1%, and the forecast was 32% only. So we are going to review this data, and we are going to take a look at the technical picture of the euro dollar and dollar to yen. But now for today, two very important things to keep an eye on are at 12 a.m. consumer price index data from European Union. As you can see, they are important and they have a even high importance because it will indicate any kind of inflationary pressure on the prices. As you can see, the previous reading was minus 0.3%. The forecast is still 0.3%, but we are going to see whether this is kind of a correct or not correct indication, because if there is any increase in inflation, right, if there is an increase in consumer price index, then the euro will shoot up. So please keep an eye on the consumer price index. And 2:30 as well, there is gross domestic product from Canada. As you remember, yesterday we got the GDP from the US, today is from Canada. As you can see, the previous reading was 3% on the monthly basis. This time we expect 0.9%, so that's the decrease. It's a significant decrease as well. So if there is any, if the data will be better than expected, then of course there will be some kind of a move on the US dollar to the Canadian dollar. And please remember, Saturday, 3 o'clock, we got the PMI manufacturing data from China, and that might affect the Aussie dollar and the New Zealand dollar as well. From a typical Forex perspective, and I think it might get some impact on American dollar as well. So as you can see, we got the previous reading 55.5, the forecast is 51.5, forecast is 51.5 as well. We will see what will be the actual reading. Will it beat the expectations or not? Will the China recover slowly but still? Will it recover from the pandemic, or will it just stay within this kind of a neutral level? Because 51.5 is very, very close to the level of 50, which is neutral in that case. So let's just take a look. I think we should take a look on the American dollar to Japanese yen. We should take a look on the euro dollar, of course, because we got the consumer price index, and we see how was the impact on the chart from the yesterday interest rate announcement, and then we are going to see what is going on the US dollar to Canadian dollar, and maybe we will take a look at the Aussie as well. So let's start with the euro dollar. I think it's the best thing we can do for now. As you can see, what do we have here is in line with our scenario. So the arrow points down towards the level of 1.1679. This level has been violated, clearly violated. The daily candle has closed at the level of 1.1673. So that's away from the bearish, from the technical support. So now this level will act as a resistance, of course. Low was made at the level of 1.1650. So if this level is violated, let me just put this intraday support. Yeah, there you go, 1.1650. If this level is violated, we are going to visit 1.1613. So this is exactly what I was saying yesterday. So if this level is not violated, there you go, we got the next target here, and we are continue to go lower on the euro dollar. The ultimate target, the first ultimate target, is seen at the level of 38% of the Fibonacci retracement at 1.1483. So that's the euro dollar. Pretty straightforward analysis. We are still under the control of bears. As you can see, we are almost at the level of 40 on the RSI. RSI is weak, RSI is negative, so there is definitely bearish influence on the market. So euro dollar, let's just take a look on the yen as well because of the yesterday's data. What do we have here? Well, we are still moving inside of this channel, as you can see here. We are still moving inside of this channel. Yesterday we almost hit there's like a 5 pips, even less than 5 pips, I guess. Yeah, there was like a 4 pips miss of the technical support, which is 104.01, and we have a nice bounce. But today we already are making a red candle again. So we are still going lower on the Japanese yen, and the next target is of course 104, and then I think I should point out some lower levels here. Let me just see, what do we have lower? I think, oh yeah, this is the level that is far away from the 104. This is 101.21. so if we break below 104, then the road towards the yearly lows, this is 2019, yeah, 2020, oh yeah, so the road towards the yearly low is open. So please keep an eye on the American dollar to Japanese yen, because it looks like this market wants to go way lower. We are still in the channel, but if we will break out of the channel, the down wave might accelerate, the bearish pressure will be more visible, and we will definitely go lower in the yen. So this is the yen. What do we have next? Canadian dollar. Ahead of the GDP data, as you can see here, we got some nice bounce on the Canadian dollar. We broke above 50% Fibonacci retracement. We broke above 61% of the Fibonacci retracement. So that short-term retracement is now out. We can delete it, so it's not necessary anymore, and we are back in this territory. Let me just show you guys. We are back in this territory of the previous wave down. So we are again testing the 50% of the Fibonacci retracement here, which is 1.3354, and we are approaching the level of 1.3417, which is the technical resistance. Of course, as you can see here, we got 61% Fibonacci retracement still not hit, 1.3439. This candle makes me feel suspicious regarding this move up, but hey, anything can happen here. We got our daily support 1.3259, 1.3224. So this is our daily supports, and it looks like we got some nice bullish momentum here. We broke above the 50 level. We are around the 60. So it's quite possible that again we will get, just as in this wave, we will get somewhere into this rectangle area, right? So we will get somewhere into this zone between 50 and 61%. Then we will see what will happen. Right now it looks kind of a bullish, but this might be the first indication of a bearish pressure. So the bears, the supply side, might be stepping in to the USD CAD market. So please keep an eye on this zone. Only if we will break above 61%, we can head toward 1.35. Otherwise, this is still corrective move to the upside. So we are waiting for the news to trigger the move, and then let's just take a look at the Aussie because of the Chinese data. As you can see here, we got our chart on a daily time frame. Let me just make it a little bit bigger. There you go. And this chart clearly shows that we have a test coming of the level of, oh, we even tested it already. Yeah, there you go. Yesterday we tested this level, the lows of this wave down, and this is the low of the 0.7006. So basically this is the nice round level 0.7000, and we might break below this level today, because As far as I can see, this move down is the key move of this week. It was made on Wednesday, I think. Then we have the continuation. We have some bounce because the bulls are basically defending this level, but there is still bearish pressure. The momentum is negative, the momentum is weak. We are around the level of 37 right now, so there is some bearish pressure against the key technical support of 0.7000. If we will break below this level, let me just take a look. What do we have next in our chart that might act as a technical support? Basically nothing much until the level of, let me just clone this one, and the key would be of course this level somewhere here around the level of 0.6777, and as far as I can see, there is not much of a support here, not historical, not even the recent one. So please keep an eye on the 0.70 level, because 7000 level, because this might be the key move for the Aussie for the next days, or even weeks. As you can see, we might get lower very fast. Let me just point out one technical support. Let's just say that this might act as a weak, very weak technical support for the price, 0.6925. So that might be the target after the 0.7000 is violated. So this is basically how it looks like for this 4 pairs that I've just presented, and the analysis is mostly bearish. So please keep an eye on the news, on the data, and I hope I see you guys on the Monday morning with a fresh new analysis, and we'll see what is going on the financial markets in the early trade of the Monday. So that's everything for me for now. Thank you very much for watching, and see you guys next time. Bye bye.